Have you ever wondered how banks recover their debts? It's a vital question that often gets overlooked. Debt recovery is a key aspect of any financial institution's operations. It's the process through which banks and other institutions reclaim the funds that borrowers fail to repay. Now imagine the scenario where a borrower defaults on their loan. Banks can't just write off these large sums of money. They need a way to recover what's owed to them. It's a challenging task, especially when the borrower is uncooperative or the amount owed is substantial. The process can be time-consuming, expensive, and fraught with legal complexities. It's not just about knocking on a door and asking for money. There's a whole legal framework in place to ensure this process is fair and just. The solution to these problems lies in the establishment of a specialized institution, the Debt Recovery Tribunal. This is where our journey into understanding debt recovery really begins. So, what exactly is a Debt Recovery Tribunal? To answer that, let's first understand that the Debt Recovery Tribunal, often abbreviated as DRT, was established under the Recovery of Debts and Bankruptcy Act, which was enacted in 1993. This legislation was a significant step forward in the financial sector, as it aimed to provide a fast and efficient process for the adjudication and recovery of debts. This is where the Debt Recovery Tribunal comes into play. The primary objective of this tribunal is to expedite the process of adjudicating and recovering debts owed to banks and financial institutions. In simpler terms, it's like a special court that ensures that banks and financial institutions can recover the money they have lent out in a swift and efficient manner. Now, you might be wondering about the extent of the Debt Recovery Tribunal's presence. As of now, there are 39 Debt Recovery Tribunals and 5 Debt Recovery Appellate Tribunals in operation across the country. Each of these tribunals is overseen by a presiding officer or a chairperson who is appointed by the central government. To qualify as a presiding officer of a tribunal, one needs to be or have been, or be qualified to be, a district judge. Once appointed, the presiding officer of a tribunal holds office for a term of 5 years from the date he or she enters upon his or her office and can be reappointed. In essence, the Debt Recovery Tribunal plays an integral role in maintaining the health of our financial ecosystem. Its presence ensures that banks and financial institutions can operate smoothly and efficiently by ensuring the timely recovery of debts. The Debt Recovery Tribunal is a key player in the financial ecosystem, ensuring the smooth functioning of banks and financial institutions. Now that we understand what a Debt Recovery Tribunal is, let's delve deeper into its powers and composition. The Debt Recovery Tribunal, often referred to as DRT, is granted a slew of powers under Section 22, Subsection 2 of the Recovery of Debts, due to Banks and Financial Institutions Act of 1993. These powers include summoning and enforcing the attendance of any individual for examination under oath. It also has the authority to request the discovery and production of documents relevant to the case at hand. Along with these, the DRT can receive evidence on affidavits and issue commissions for the examination of witnesses or documents. It also holds the power to review its decisions, dismiss an application by default, or decide it ex parte, which means deciding a case based on the interests of one side only. Furthermore, it can set aside any order of dismissal of any application by default or any order passed by it ex parte. Additionally, it can exercise any other matter which may be prescribed. Now let's shift our focus to the composition of the Debt Recovery Tribunal. Each DRT is headed by a presiding officer appointed by the central government. But what does it take to be a presiding officer? Well, a person is deemed qualified for appointment as the presiding officer of a tribunal if he or she is, or has been, or is qualified to be, a district judge. The tenure of the presiding officer is a pivotal aspect to consider. The presiding officer of a tribunal holds office for a term of 5 years from the date they enter upon their position. And here's the icing on the cake. They are also eligible for reappointment. With such comprehensive powers and a specialized composition, the Debt Recovery Tribunal is equipped to handle complex debt recovery issues. So whether it's summoning individuals, examining evidence, or making critical decisions, the Debt Recovery Tribunal stands as a robust institution in the realm of financial recovery. Why is the Debt Recovery Tribunal so important in today's financial landscape, you may ask, and rightly so? The Debt Recovery Tribunal, or DRT, is not just a cog in the wheel of our financial machinery. It is more like the oil that keeps the engine running smoothly. In an economy where credit is the lifeblood, the DRT plays a crucial role in ensuring the financial health of banks and other financial institutions. These institutions lend money to individuals and businesses, fueling growth and progress. However, when these debts go unpaid, it can significantly impact these financial institutions' ability to function effectively. This is where the DRT steps in. The DRT, established under the Recovery of Debts and Bankruptcy Act of 1993, provides a fast and efficient mechanism for banks and financial institutions to recover debts. It's like a financial ambulance rushing to the scene when there's financial distress, ensuring that the lifeblood of our economy, the credit, keeps flowing. What makes the DRT so efficient is its powers. It can summon individuals, require the production of documents, receive evidence on affidavits, and issue commissions for the examination of witnesses or documents. In short, it has a wide range of tools at its disposal to ensure debts are recovered swiftly. But the DRT isn't just about recovery, it's also about fairness. The presiding officer of the DRT, who is or has been or is qualified to be a district judge, ensures that the proceedings are fair and just. This balance between efficiency and fairness makes the DRT a vital part of our financial ecosystem. And let's not forget the larger picture here. The efficient functioning of the DRT has a ripple effect on our overall economy. When financial institutions are healthy, they can lend more, fueling economic growth. So, in a way, the DRT is a guardian of our economic well-being. To sum it up, the Debt Recovery Tribunal is a crucial institution that helps in the expeditious recovery of debts, ensuring the smooth functioning of our financial institutions and the economy.